Good afternoon and welcome to NYFP. This afternoon I'm joined by Todd Schoenberger of LandColt Trading. Hi Todd, thanks for joining me today.
Thank you for having me.
Well, in today's session we're seeing that the Dow has posted a triple-digit gain and we have received mixed earnings as well as data releases. But what do you think is behind today's trading action?
Definitely what's happening in Europe right now. When you talk about the Greece default risk, and now you have the Eurozone that they're willing to let's say soften the terms of the bailout, and they're actually they'll lend the money to Greece, basically doubling the maturity time from 7.5 years up to 15 years, and lowering the interest rate for that loan from 4.5% to 3.5%. That is all spelling good news. Traders on the floor are very comfortable that there will be a resolution with the Greek debt crisis. If that's the case, obviously stocks should do well.
Well, Todd, since you did touch on the Eurozone, let's take a look at what's happening in D.C. now. The deadline for the raising the debt ceiling is approaching, but do you expect to see a possible extension, or what do you think will happen once August comes around?
Well, I got to tell you, that's a great question, and that is an underlying issue here on the floor. You'll probably hear a little bit more about it as far as traders really being concerned about it by the end of next week. But keep in mind, President Obama has been very adamant about the fact he is not going to file a temporary extension. He wants the deal done, and if it does get done, here's the thing, they can agree to the deal, to the terms of this, but then to actually write the legislation and get it passed before August 2nd is going to be challenging in itself. So right now, we are actually coming to our own deadline, probably in our minds, thinking this thing is not going to get done, and if we default, and even if we don't default, but then you still have the underlying risk from Moody's and S&P of possibly downgrading the United States of America, if that occurs, you are going to have a massive sell-off here at the exchange. It's going to get ugly.
Okay, Todd, well, now that we've covered the major fundamental issues and what it means in terms of stock market action, let's move on to earnings. Now, we have gotten results from a lot of the bellwethers. What is your take on the rest of this year?
Well, I think this quarter is actually going to be very nice. I mean, keep in mind, we S&P 500 companies have, over the last year, have really beaten the bottom line estimate that Wall Street anticipates for these companies. So far, you're looking at 13.5% earnings per share growth for S&P 500 companies. That's decent. It's still the slowest or the lowest rate during this post-recession period, but still, you're going to have a number of companies that continue to beat on the bottom line. We have a couple of big blue chip companies coming out tomorrow. McDonald's is one of them, and you should still see positive earnings growth. The real question will be, what is the forward projections, or what are they going to look like? I mean, obviously, Apple is going to always have great forward projections, but yet again, the financials have a dire future and things that they're already warning us about. So that will actually cause some selling pressure in the markets probably in the next weeks to come, because we're also relying on the macroeconomic data, which obviously continues to be poor in this country.
Well, last but not least, Todd, before I let you go, you touched on an interesting topic. Indeed, some of the results in the tech sector have been mixed and financials have also been mixed. But what are you staying away from?
Well, I would have to stay away from the financials. I mean, it's very difficult for me to understand how Bank of America can be trading at a 2-year low, and we're in an economic recovery. I mean, when you look at the financials and the toxic assets that are out there, the mortgages, you still have a number of loans that are defaulting. You have a number of issues there, not to mention the fact the bulge bracket banks really rely on trading. And as you can see here on the floor today, I mean, you have a triple-digit gain, and it's very quiet here today. So volumes continue to be low. Assets under management are great for companies that really cater to manage money programs. But realistically, though, from the banking perspective, I would stay away from the financials right now.
Okay, Todd, as always, thank you so much for your time, and thanks for weighing in on all the topics.
Thank you, Remy.